Eric Muathe, Muathe.com with world market analysis for the weekend of February 18th and February 19th, 2017. Let's take a look at how markets closed on Friday. We can see, let's call it a little bit of a down session on most of the major Asian markets. Take a look at the European markets at the close of Friday's session. We can also see that pretty much small change. So that's how market closed in Europe. Take a look at the Americas, and Friday's session also saw a little bit of a mixed bag. Let's call it small changes, a little bit to the downside. US markets closed slightly to the upside. Let's take a look at those charts. We begin by taking a look at the Australian market, and we can see that this past week it cleared the recent weekly closing high. So that's a breakout on a weekly standpoint. And the level it needs to stay and hold above is 5,809. So if it can sustain levels above this, that's a good breakout. Otherwise, if it rolls over and fails, so a failed breakout here is exactly what the bulls don't want to see. And keep in mind, we are coming back to the RSI level where it has been stalling. To see this, you have to go and take a look at a 3-year weekly chart. So we got 3 years worth of weekly data, and this line has been a problem. So here, once we broke down here, we came off the highs of 2015. Pretty much you draw a line from there. That's uniformity line of resistance. And every time we tag that line with uniform action, we get a reaction or move lower. You got resistance here for these highs and another move lower. And recently we actually tagged this line here with uniform activity rejection for the highs here. We got a multi-week pullback. And so in essence, we are coming back to test that line. And if the market is to move higher, it needs to clear that line of resistance. Otherwise, resistance on this blue line suggests that the next meaningful direction is going to be lower. So if that is confirmed as resistance, it will not surprise to see that the weekly breakout fails. So we need to watch that line for potential evidence of resistance week to week. And there's also another line. If you connect the RSI highs on the weekly, should look something like that. You can see we are coming back to test that line. If bulls want to move the market higher beyond current levels, they need to take out that line of resistance. Otherwise, confirmation of resistance on this line suggests that the next meaningful direction is going to be lower. So if with confirmed resistance here, if it happens, we can expect that the next meaningful direction is lower. Again, bulls would like to see the market clear this line if the market is to see and record higher price levels. If we take a look at the daily, we can see evidence of potential stalling based on the fact that we made an improvement in day-to-day price highs here. That's a 52-week closing high this past week, but the technicals did not make a higher high. So that's negative divergence. Also, we can see that this resistance currently being shown on the daily chart goes back to where it broke down recently. So based on this line here, which was the recent resistance level right here. So again, we can see that the market is already responding to that line. So it makes sense, if this becomes resistance, that the next meaningful direction is lower. Otherwise, what the bulls need to do is move the market above that red line. And so market bulls would like the market to clear that red line and move higher. But the way we close for the week, we close with the resistance on that line, suggesting that given that information, chances are that the market is now poised for a pullback unless it can clear that red line of resistance. On the monthly chart, take a look at the charts that I follow. This is my chart here that I track, and we can see a couple of issues developing here and has been developing over the last couple of months. And it is the fact that it's coming back to test the topside RSI resistance on the monthly. That's one layer of potential resistance. Also, we can see that this is where it broke down off the highs of 2015. So there's a break of this trend line. There's also another backtest line here. So this line gave us the break level that brought the market off the highs of 2015. It broke here off the highs, became resistance here off these shallow highs in mid 2016. We are coming back to test that line. There's also another layer of potential resistance, which is this level here. Where does that level come from? It comes from the previous break here. So this break here gave us a warning high. We tried to move above that red line here and we were stalled with uniform action, which is what I call the uniformity principle. And you can learn more about this method by taking a look at the playlist on my YouTube channel. So the principle I'm talking about here is right here. But you can also take a look at additional playlists if you want to understand this principle. I should have this on the description or in the description of the video, so check the description for the link. And so to draw that line one more time, this was the break level. And so pretty much what I'm saying is we are coming back to test that line in the current market. If we are unable to move above this red line here, chances are the next meaningful direction is lower. Don't forget, we are also getting close enough to potential breakout. And this was the previous monthly closing high, and that's at 5898.48, as you can see. So a market would need to break above and clear that resistance if it is to see higher prices. So that's something we can also watch. A breakout would be great for bulls. Failure to break out here might suggest that it is running out of momentum. But to summarize this monthly chart for the Australian market, it does need to clear the resistance line on the RSI top side. And so it does need to clear this line if the market is to record a substantial move. Otherwise, confirmation of resistance here month to month suggests that the next meaningful direction is lower. For example, if we take a look at this breakout here in 2004, once it cleared that resistance line here during this period in 2004, the market had a chance of recording this substantial movement to the upside. So in this current market environment, it can do the same thing, but the first order of business is to clear this topside resistance line. If we take a look at the Chinese market, it needs to clear the recent weekly closing high if it is to see higher prices, and the level to watch there is 3261.94. So it needs to clear that line if it is to see higher prices. Couple of challenges. Number one is the topside RSI resistance line. That could become a problem. There's also the recent break level that is also being tested, and it is this line here. Figure out where the movement began. So it was this break, broke down there in November. Once it broke down here, came off those highs of 2016, we are coming back and testing this, so it needs to clear this line also. So until it can clear those two lines and until it can break out, one can say that at the very worst it's going to be sideways, or at the very best it's going to be sideways without breaking out. Otherwise, failure to break out and also the fact that we have those resistance lines suggests that it is very conceivable here that without moving above those two lines, without breaking out, chances are sideways or maybe down. If we take a look at the daily chart for the Hong Kong market, we can see here that it is holding above 69.1. So as long as it is trading above 69.1, chances are it should be stable to sideways to bullish. Now, I see a couple of things also, that the daily breakout seems to be stalling. So there's a previous daily closing high there. That daily closing high goes back to September 2016. And the level to watch here is it needs to stay above 24099.70. So this is the recent daily closing high from last year. It closed the week below that, so that's a early signs of a failed breakout. Otherwise, bulls might need to push this beyond the closing high from 2016. Needs to be above that level. Otherwise, failure to move and holding it above that level suggests that with a failed breakout, chances that the next meaningful direction is lower. In fact, if you take a look at the weekly chart for the Hong Kong market, you can see that it is right now also showing that the weekly breakout is in question. We have the same weekly breakout level, and it is 2400099.70. So if it cannot break out above that price range, that's not good. Keep in mind, we're also coming back to test the previous break level. As you can see here, this was the break level of the highs of 2016. We broke down here, brought the market lower. Now we are coming back to test that same level. So week to week, we need to clear this line if we are to move higher. Otherwise, resistance on this line suggests that the next meaningful direction is lower. So either we get a price breakout, which is bullish, or we fail to break out and confirm resistance here. And then week to week, we start looking like more than likely chances are we go lower without a breakout in price or moving above that RSI resistance line. Speaking of breakouts, we can see that the Japanese market was trying to break out this past week and did not hold above the breakout level. In fact, closed down for the week. And the level that we were watching there for a breakout was 19,454.33, which is the weekly closing high going back to end of 2016, early 2017. So with a failed weekly breakout, it's not a good sign. Take a look at the daily chart. Daily chart has levels, several levels of resistance. You got top side resistance, and looks like a double top on that line recently. Resistance here and resistance here. One can reasonably expect a big down day if the RSI slashes below 50. So expect a big down day if you see the RSI below 50. There's also another layer of resistance, which is the recent break line. So this break brought the market lower off the highs here, and since then it's been resistance, as you can see. So we've hit that line with uniform action, which is the uniformity principle. Again, check the description for the link on what I'm talking about here. But there was resistance here, and then again double top here for the highs here. So day to day, we see like it is showing multiple layers of resistance. If we take a look at the monthly chart, long-term monthly, we can see that even when we go back to the most recent bear market, which was this break in 2007, before the major drop here, draw that uniformity resistance line, and it should be somewhere here. And you can see that that same line was the break level. So break level here off the highs of 2015. So we are coming back to test that line. The market responded very well when it moved above that line, which is this period here, which is this entry. It found support on that red line, which is the lows here, and was trading pretty much to the upside throughout this entire period when the stock was trading above the red line. So we need to be above the red line if the market is to record higher prices. Resistance on this red line suggests that the next meaningful direction is going to have to be lower. We take a look at the Nifty next, and we can see that this week pretty much slowed the recent momentum. Keep in mind, it has moved nicely from 7,900 all the way to about 8,900 in a couple of weeks. And so pretty much what we are doing here is coming back, and we seem to be stalling as we try and move above this recent break line. This was the break line on the RSI that brought the stock lower off the highs of 2016. So we draw a line from there. You can see that either the market is going to be resisted and rejected here, suggesting the next swing trade might be lower. Otherwise, market bulls would like the market to clear this red line so it can see higher prices. Don't forget that also what the market is trying to do here is doing its best to break out above this closing high from 2015. And if the market can clear that level, then we can say the bulls are in control. Right now seems to be stalling. The last couple of times it tried to break out was here and failed here, failed again this month and failed here. As of this month of February so far, we've been unable to hold above the previous closing high, and the level to watch there is 8844.60. So without a breakout above this price, then the market doesn't have strength. Otherwise, market bulls have to figure out a way to clear 2015's monthly closing low, monthly closing high, if this market is to move higher. So a breakout is what the bulls want to see. Right now the bears are getting what they want, which is a failed breakout attempt. Now on the daily, I can make an argument here that the market looks okay on the daily based on previous recent break line, and all you have to do is go back to this line here. So once the market cleared that RSI resistance line short term, what happened is the market went on a nice move. So this breakout here brings the market to this phase, and of course you can see that we clear this price range. We have a little bit of a move to the upside. So that RSI line also is relevant in the current market, because if you extend this line this way, you can see that during this past week we came and hit this line, found support there, and now the market is moving higher. But one concern here is how the market lost a lot of the gains for Friday's session. It's not good. So that's not a good sign. Take a look at the hourly to see what happened here. And on the hourly, what we can see here is an improvement hour to hour. But take a look at this line of resistance. In fact, the market tagged that same line and was rejected here. So the market is definitely making lower highs on the RSI. That negative divergence might set the stage for a pullback. There is also another line, and that line is a backtest line. So this line here was a previous support line. As you can see, the market found support on this line during these lows and went higher. So what we can do is extend this line here, and you can see that it was the break line during the pullback. So this pullback here, shallow pullback, resistance on that line for the highs here, coming back and showing resistance here. So hour to hour, we can see that the market, as far as the Nifty is concerned, seems to be indicating more than likely maybe the market around here pulls back, which might affect the weekly chart. Keep in mind, we are failing to hold monthly breakout levels. So more than likely the conclusion here is we end the week with a slight feeling that the market wants to pull back. Take a look at the South African market, and we got a couple of resistance lines. You got topside RSI resistance line coming in play recently. So the market needs to clear the topside RSI on the daily. We can also see that we're talking about recently here, there was a break, and this break here in the RSI led to a shallow pullback. And so pretty much, if we are to sum up what is going on, in my opinion, so the breakdown here brings the market recently low, and we are coming back over the last couple of days, try to move above that red line. We've been rejected twice. So we can say day to day, here's another market that is also pointing to either sideways to down until it can clear those two lines of resistance. Let me show the other line that I just drew, which is the line connecting RSI highs. So until it can clear this line also and the red line, chances are we are looking at a market that is sideways to down. Let's take a look at another market. This time we go to European markets and we take a look at the French market on the daily. And with a pullback on Friday, it makes sense because pretty much what we've done here over the last couple of days was come and test this break line. This was the break of the highs here. We got a pullback, and so we are coming back and testing that break. That's uniformity principle, and you can see the market has rejected the RSI with uniform action, hence why I call it the uniformity principle, which is this high here, and now we are pulling back. So that's one red flag. Another red flag is pretty much we made a short-term high or an improvement in price highs here, higher highs. Take a look at the RSI. That was negative divergence, and not only was it negative divergence, it was the worst type of negative divergence. Why? Because you made new highs, yet your RSI did not move above 61.8. That tends to be the worst type of negative divergence. In other words, more than likely, we might get an even stronger pullback. And don't forget that we've got that monthly chart that, in my opinion, is actually a level to watch, because if we stall here on the RSI on the monthly, it's not a good sign. Because what I think is going on here is on the monthly chart. This is a long-term monthly chart going back to 1990. So there was this break. I've talked about this over the last couple of months of the highs here in 2015. And so we are pretty much coming back to test that line. Failure to move above this line month to month suggests that the next major direction is going to have to be down. If we test this line and go backwards, you can see it coincides nicely with the break here in 2000. We know what happened between 2000 and 2003. We had this major bear market phase, and it coincides nicely with this break also here. You can draw it right there actually. Either way, so this break also was a major high coming off the highs of 2007 and major bear market in 2008. So we can see rejection here is a big deal. So the monthly chart needs to clear this red line, otherwise we run into some type of short-term problems. Take a look at the German market, and the DAX also has a similar looking monthly chart. This is where we broke down off the highs of 14, 15, off the highs there, actually off these highs here, and we are coming back to test that phase right there. So if this is confirmed as resistance month to month, it's not a good sign. And also the German market had stalled previously. Take a look at this break coinciding with that line, gave you a major sell signal here. Late 2007, you go into a bear market, you break the trend line here, coincide with the red line, which is this break, we go into a major bear market 2000, 2001, 2003. And we can also see for the FTSE, same type analysis here. We got top side resistance actually, and so we have to go and take a look at the top side resistance on the FTSE. Needs to clear that line, and you can draw a line that was a break line here in 2000. This RSI break corresponds with the movement of the highs. We draw a line from here, just simple line like that, and this is where we are trading at right now. So we can see that every time it breaks this line here, we go into another major bear market in 2007, 2008. And recently we went above the line and back below it with uniform action for these highs here. We try to move above the line here and here in 2015 off the highs here, and we are coming here in 2017. If we are unable to move above those two lines, chances are we might go into a major bear market. Otherwise, market bulls would like the market to clear those two lines, and once they clear those two lines, then the market might have a chance to continue recording all-time fresh highs. Take a look at the Canadian market, and we can see that this past month it is actually moving above the previous all-time monthly closing high. So So the key is whether the RSI can hold above 69.1. The last time it stayed above 69.1 for a long period was this period here in 05, about early 05, which is here. From here it pretty much stayed above that. If you take out this small period here where it subsequently went above 69.1 until here. So from 05 to about somewhere here, the RSI was pretty much defending the 69.1 level. So if the market is to see substantial higher levels, it needs to stay above 69.1. One thing I can see here visually is that there is a line here, which was a previous support line that became a break line. What you can see, once the market broke down here, we come off the highs of 2015. So I think what's going on, in my opinion, is this is a month-to-month situation, not day-to-day. But if you extend the same line, you can see there's a possibility by the end of this month, going into the new month, this might be rejection territory, which might actually give us the eventual high. Of course, we shall see. But if this is rejected month to month, then chances are whenever that rejection is confirmed, the next meaningful direction is lower. And again, the key here is whether the RSI can hold above 69.1. Anything above 69.1 is ultra bullish. Let's take a look at the Brazilian market, which this past week was moving above 2012's monthly closing high, and that level was at 65,811.73. So which goes back to this monthly closing high right there in 2012. So the monthly price breakout looks good. My problem here with the chart is the same problem I've had with the chart for a couple of months, and it is this fact that it is coming back essentially to test this break level. This break level in 2010 of the highs here has been a problem. We draw a line from there, which is our uniformity resistance line, and this gives us good information because this was confirmed as resistance on that blue line for the highs there. We tried to move above this line, but we were rejected with uniform action, hence why I call it uniformity principle, which is this top here. We've already hit this line once for the highs of 2016. We are coming back to test that line. So clearly here, if market bulls can move this RSI beyond the blue line, that might indicate we might have to go higher. Otherwise, failure to move above this blue line month to month indicates that the next meaningful direction is lower. So resistance here on the monthly, especially if we form a double top, might suggest that the next meaningful direction is lower. So to conclude here, the market needs to clear this well-defined RSI resistance line. Failure to move above that line suggests that after a nice move off the lows of 2016, we're talking about a move from about 38,000 to about a high here of 63,000. So that's a sizable move. So with the resistance here, chances are the next meaningful direction is gonna have to be lower. That's it for this weekend. Otherwise, enjoy the rest of your weekend. This is Eric Muathe with Muathe.com. Subscribers, be on the lookout for part 2 of the US market analysis, where we're going to look at commodities, and also I have some stock picks for you. As always, good luck, peace, and blessings. E-A-C-S. Woo! Testy, testy.